I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news and data ahead of the Wall Street Open. Coming up, Fed speakers and an auction as well. Investors eyeing US policymakers ahead of a key 3-day run of new bond auctions. And Uber Technologies bets on holiday travel demand. We'll have a look at its results and tell you why its shares are climbing. Retail and love, eBay and Bumble among the big names reporting later. Now, good afternoon. I'm Angeline Ong, and welcome to this new edition of Beat the Street. Not long now before Wall Street starts trading, let's have a look at the volatility index for you first. As you can see here, volatility has been steadily coming down since around the end of October. And it's really, to be honest, quite low compared to the highs seen early in October. And also, given what we've seen in the Middle East and the recent change in mood music from the Fed, it is relatively lower compared to all those events. Also wanting to show you what's happening ahead of the Wall Street Open. Stocks indicated lower. However, US Treasury yields are not, and the dollar creeping higher as well as investors look to test the market's conviction on peak interest rates ahead of that 3-day stretch for billions in bond market sales. Now, why this is key is because we're watching out to see whether or not there is enough demand for US government debt. The benchmark 10-year Treasury yield currently lasts at 4.6%, slightly lower than Monday's level. Also want to give you a heads up because we have quite a slew of speakers out of the Fed. We've got Fed Board Governor Christopher Waller, New York Fed President John Williams as well. On Wednesday, the star, or rather the keynote, will be from Fed Chair Jerome Powell. Last Monday, Neil Kashkari, Federal Reserve Bank of Minneapolis president, doused hopes of early rate cuts. Now, one of the key earnings that we are watching for you, Uber out with third quarter revenues of $9.3 billion. The expected number was $9.5 billion. However, the company says it sees Q4 gross bookings between $36.5 billion and $37.5 billion. This was slightly higher than anticipated. And also, Uber saying that Q4 adjusted core profit coming in above expectations. All this, let's take a look at the shares now, are slowly moving its shares higher. Uber, of course, is one of the shares on the IG platform. That is all sessions. There you go. That's a daily chart there for you. But let's take a look at the minute chart because it's quite fascinating what's been happening since the results and the forecast coming through. At one point it was low, but it quickly reversed direction. And now it is higher. What's also interesting about all this is that we have more news out of the autonomous vehicle car space. Uber, of course, one of the key players in this space. They want to have autonomous drivers in the near future. General Motors in this space said it plans to temporarily halt production of its fully autonomous Cruise Origin van. Just bring up GM for you because it's all sessions as well. What is interesting about this is that GM has sunk so much money into Origin. And also the Cruise Origin van was seen as a unit that was going to drive its autonomous vehicle aim. The self-driving vehicles, according to Californian regulators, they say that it was a risk to the public, and therefore they have suspended the robo-taxi operators license. The National Highway Traffic Safety Administration also said in July that it expected to make a decision on the petition put forward by Cruise. But last month opened a new probe into whether or not Cruise is taking sufficient precautions to safeguard pedestrians after opening an investigation in December that is still ongoing. So really interesting space for General Motors and Uber, and of course Tesla as well, all those companies that are linked to the autonomous drive. And whilst we are on the car market, I just want to also remind you that we are also looking out for Rivian, because Rivian Automotive is expected to post higher third quarter sales. The company delivered more cars in the quarter on the back of steady demand for its vehicles. To one huge story that we're following for you. Now, you might be wondering, what next for WeWork? The SoftBank Group-backed startup has sought US bankruptcy protection. This is after its bet on companies and individuals using more of its office space soured. What actually happened was corporate clients decided to invest in remote hybrid working, meaning staff work from home instead. 74% of WeWork's revenue was literally consumed by renting space. So what happens now for WeWork? Well, 92% of lenders have agreed to convert secured debt into equity. WeWork expects business as usual outside the US and Canada, and franchisees around the world is also expected to operate as normal. But where is this all addressing? Well, with expensive leases, a liability bill of more than $18 billion as of June, and shares that have plunged more than 90% so far this year. It remains to be seen if debt restructuring planned will be enough to save WeWork. Keeping an eye on UBS in the US for you as well. I just want to show you the shares here. These are the US ones on the IG platform. Shares are rising in Switzerland after the company reported better than expected underlying net profit in Q3 and signaled that its core wealth business is stabilizing. This is even as it reported that net profit missed expectations. Just taking a look at the headline figures for you, the Swiss bank had to book $2.1 billion in expenses tied to the takeover of Credit Suisse. Excluding takeover-related impact, UBS reported underlying profit of around $844 million. And since the takeover last June, UBS oversees more than $5 trillion in assets, but is still working hard at stabilizing the new structure. To prevent Credit Suisse clients from leaving, it had to offer above-market rates on deposits. Restructuring is also inevitable. UBS has said it would axe a number of jobs, including 3,000 in Switzerland alone. To some of the stocks to watch, and we have quite a few, starting with Intel. Just getting the chart up for you because it's all sessions on the IG platform. This is the hourly view for you. Intel is currently on the hourly view, edging higher after reports said the chipmaker was a leading candidate to get billions in government funding for secure defense chip facilities. Now, ahead of that, and also ahead of Uber's earnings, IG's Axel Rudolph has been taking a longer-term view of the tech-heavy Nasdaq.
The Nasdaq 100 is really, really interesting from a technical perspective because what we saw the last few weeks is us basically holding above the red line here, the 200-day simply moving average, when we made our October low. And then we had this 6 consecutive days of gains of above 6.5%. Basically last week being the strongest weekly gains we've had for all of this year. And all of this has taken us to the July to November downtrend line, which now short-term caps the advance. But that's quite normal when we hit resistance after a very strong upward or downward move. And basically what we're seeing here is just some short-term consolidation. But I wouldn't be surprised that any minor sell-off would be bought up again by investors now that they don't expect the Fed to hike their rates one more time. And from a technical perspective, what is interesting is that if we can break above this downtrend line, and also ideally rise above the mid-October high here at 15,339, then it looks pretty likely to me that we are breaking out of this bull flag formation and could be heading well above the 16,000 mark, probably before the end of the year, because as you can see here, we have a very long flagpole, then the bull flag here, and then the breakout of the pattern would happen once we break through that downtrend line. So potentially a lot of upside still to be seen with regards to the NASDAQ 100.
Thanks very much, Axel. The NASDAQ currently pairing declines last seen flat there. Just wanting to turn your attention to eBay as well, another all-session stock, because it is currently not showing that it's likely to report a rise in third quarter revenue driven by resilient demand for refurbished products on its platform. Dating app operator Bumble also expected to report higher third quarter revenues on sustained spending by users looking to connect with people on its platforms. Let's show you the chart because the founder, Whitney Wolf Herd, is going to step down as the chief executive of the dating apps operator and also hand over the role to seasoned executive Lydiane Jones, knocking shares down. Just want to show you that reaction there, some 10% on Monday. Also, don't forget, Bumble has been seeing rising competition from the likes of Match. Now, before we go, here's a last look at how the market is looking. As I said earlier, the NASDAQ looking like it's pairing the declines there. The Wall Street, which mirrors the Dow Jones Industrials, currently at the moment indicating a pretty flat open. A similar picture for the US 500 as well, which mirrors the S&P 500. But it has to be said that much of this is a wait-and-see stance before the Fed speakers, especially Jerome Powell, has his speech midweek on Wednesday. And that's it for this edition of Beat the Street, the show that follows the trading action, helping you position yourself ahead of the opening bell. For more trading insight, follow me on @IGCom and @Angeline Ong on Twitter. This is IGTV.